Well, guys, I think I found out the actual lowest amount of money potentially needed to be invested into the SCHD ETF or the Schwab US Dividend Equity ETF in order for an investor to retire later on in the future. The amount of money and the barrier to entry is so little when it comes to this ETF. If the ETF performs like it has historically, it's honestly comical. Now stick around because we're going to go through all the numbers and multiple different scenarios, including the best case scenario and the worst case scenario later on for this ETF, in my opinion. So if you're a long-term dividend investor that wants to know the answers, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So why even make a video like this? Why is this interesting to investors, and why did you guys even click on the video? Well, this is of course simply because this ETF historically has grown over time, but also it's been paying investors like myself and like many of you more and more in dividend income over time also. And because of this, an ETF like this one, if the dividends are reinvested into more shares of it over several years, this ETF offers the snowball effect for investors, which can turn a relatively small amount of money into a massive boatload of cash later on. And this is because the power of compound interest. Because you see, as you buy shares of SCHD, the ETF pays you dividends every quarter. You use those dividends to buy more shares of SCHD, which are going to pay you more dividends, of course. The compounding effect takes place. So the whole idea about ETFs, especially like this one and others, of course, is that, of course, investors that don't have hundreds of thousands or millions of dollars still potentially have just as good of a chance to retire very wealthy if they just stay the course. Now, without wasting any more time, let's get right into the numbers because we have a lot to go through. First of all, SCHD, as of right now, trailing 12-month dividend yield is around 3.3 or 3.4%. Now, that's more or less the starting yield you're going to receive for every single share of this ETF that you buy as of today. Now, again, this ETF has been paying more and more over time, which is showcased right here, front and center, with almost a 12% dividend growth rate over the trailing 12-month dividend yield. Over the 3-year time frame, 9.54%, over the 5-year time frame, 12%, and over the 10-year time frame, 11.13%. So like I shared with you guys earlier, this ETF has a track record of not only paying more in dividend income, but somewhere up around 9 to 12% on a yearly basis. That is a massive raise. Imagine that's a raise at your day job. That's a massive increase in wages or salary, if of course you were to receive that every single year. So to go into the numbers and try to figure out what the lowest you actually would need to invest into something like SCHD over a long time frame, starting off with just an example of $50,000 and $12,000 also on top of that contributed every single year. Now, this is sort of the bear case. SCHD, as of right now, is almost a 3.4% initial annual dividend yield, an expected annual dividend amount increase of 8%. Now, as of right now, it's much higher than that, but even if things were on the lower end, 8%, and even if the ETF only rose by 6% per year, still with these numbers, you are going to see a massive output. Now, keep in mind, dividends are going to be reinvested along the way, and they're paid out quarterly, but let's see what we get. So with the initial $50,000 investment and just going off for the numbers that we talked about, it would definitely take several years for the principal and the annual dividend amount to get very large. But just after 4 years, the portfolio in theory would already be over $100,000. Now keep in mind, for this example, we're talking about a $1,000 contribution every single month, but stay tuned because we're going to go over much less. But if an investor started off with $50K, which isn't the most amount of money in the world, I get it, it is a lot of money, and just $1,000 a month on top of that into SCHD, and just sat on their hands, reinvested the dividends along the way, after 30 years based off these numbers, we're talking about an ending balance of $2.89 million and over $150,000 in dividends. Now, if we were to do that same exact experiment, but only change the expected annual dividend amount increase on the higher end at 12%, which is what we've seen over multiple time frames. This same exact portfolio that started off at $50K and also contributed $12,000 per year, this portfolio would end up at $6.9 million and over $1 million per year in dividends after 30 years. Now I get it, that's a long time frame, and I know $50,000 and $12,000 a year on top of that is no chump change. So going way lower here, a $30,000 initial investment and then $1,200 per year on top of that. So $100 every single month on top of the $30,000 initial principal. Now again, $30,000 is still a decent amount of money, but if you were to just spend $30,000 on your entire retirement, that would be a relatively tiny amount of money Now, as far as the other stats, we're still sticking with the 3.4% initial dividend yield. We're talking a 10% expected annual dividend amount increase, which is somewhere in the middle of what we've seen. Again, this could be higher or lower in the future. A 6% expected annual share price appreciation. Quarterly distribution, once again, dividends are going to be reinvested. Let's see what a $30,000 initial principal and just $100 per month will give us. So obviously that $30,000 initial principal is going to take quite a bit more time to reach the $100,000 mark, 12 years to be exact, based off these numbers, but still just to prove the power of compound interest is real. After 30 years, we're talking an ending balance of $1,034,000, which is incredible considering this portfolio started with just $30,000 and continued with $1,200 per year. Now, even with a $10,000 initial principal based off these same numbers and $100 per month on top of this, this portfolio still would take a long time to grow. Don't get me wrong, but let's be real, just $10,000 is not that much to invest for your retirements. But over 30 or so years, the portfolio, in theory, based on these numbers, could end up at $535,000 plus and almost $50,000 per year in dividends. Now again, like I always say on my videos, take all these numbers with a grain of salt. We don't know exactly what SCHD's future dividends are going to look like or the future growth of the ETF or anything of those sorts. We're just basing this off of some historical numbers and using some of the data that we have over the last 13 or so years. But even still, it just does go to show that by investing into a super powerful dividend growth ETF that not only has grown 240+% on the max time frame, this is over 13 years, but also, like I said earlier, this ETF has paid investors more and more in dividend income over time. Now, just to give you a quick reminder, around 13 years ago, investors that bought into SCHD were receiving anywhere from around 4 cents per share, and this is all split adjusted to 5 cents per share on a quarterly basis. Now, as of recent, 27 cents per share, or even 25 cents per share. That is so much more income for every single share that investors bought back here, and I'm sure there's even maybe some investors watching this video that have been buying and holding SCHD since inception. So the idea is not to buy into something like SCHD and expect to get rich overnight or expect to have the dividends pay for all your bills and then some, but the idea is that a relatively small amount of money invested over time, as long as you stick with it, reinvest those dividends, and just let the portfolio grow, you definitely have the potential and the chance to build a small portfolio into a massive one sometime in the future. So now that we went through and I actually showed you guys what might be some of the lowest amounts needed potentially to invest into SCHD in order to retire completely off this ETF, I lastly, most importantly, want to hear from you guys down below. As far as an ETF like this one or like others when it comes to retirement, what's your number one favorite ETF across the board? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.